Is the market going to be going down today? Great question. And my question to you is on what time frame? So for example, we're already gapping down. So the market is down already. The market's going to be down from Friday. If we open up where we're at, 1.4%, a decent down day. After that, though, is the million dollar question. I mean, if I know with 100% certainty, I'm placing the whole house on it. I'm gonna take out a bunch of loans, but there is no 100% certainty. There's just probabilities. So based off this chart, the probabilities say that we could go lower first, maybe on like an hourly time frame. Maybe the first hour of the day is red, find some support, and then bounce for like 2 hours because we're in a channel. Now that's making predictions. It's more important to react than make a prediction. But if the chart isn't moving and we're in the pre-market, that's the best that I can do right now. Welcome back to Weenie Trades. That intro clip was from the pre-market live stream that we had this morning, and I just wanted to share what it looks like when you show up first thing in the morning. So SPY did that first hour dip, and then the rest of the day just bounced. So a nice good recovery, and it just shows that we're range bound. So this upcoming week on the SPY, it looks like we're more likely to test that 390 level. So 390 is the stretch target on the upside. Maybe it can press a little bit further and get something as high as 395 if this is the daily higher low. Now the question becomes then is this a broadening pattern where we've got higher highs and lower lows just barely, and we just do a wide chop shop? So it really depends on what time frame that you're looking at, and that's the whole point behind this. What time frame are you looking at? Short term, medium term, or long term? So short term, as long as SPY is above today's high 382 and holds it as support, hey, guess what? We're likely to push higher within the next few days or this entire week. But if we go to something like the weekly time frame, it looks like there's just a bunch of chop. So the weekly is just starting to get oversold. That's a little bit goofy how the weekly is still staying oversold on the money flow index while SPY is just kind of chopping and flopping all around. So we could have weeks of chop shop, and this is something that could develop into a bigger bear flag. And I just have a thesis. Again, theses don't really mean much, just as like my pre-market thesis, anything could have happened. However, my thesis is when we get the second GDP report, which I believe is in September, that will signal the recession. There's like a 90% chance that the second GDP report is going to be negative, and then we're going to be, oh, we're in a recession. Everybody freak out. But just like the day that Ukraine and Russia went to war or officially announced it, that's when the market had a big bottom and started to rally very nicely. So what I think might happen is we might sell off into the recession news, and then the day they announced the recession news, we probably get a little 2 to 3 day rally. Again, though, that's just a bunch of speculation, but I'm just going through the time frames in terms of I think that the market is more bearish over a multi-month period. But this week we could get a good pop as long as we hold above 382 on the SPY. Oh, and just a quick reminder, I am trading SPY through the futures. So today is the last day of the Save 80, so 80% off an Apex funded trader account. And you can get an evaluation account for 80% off. Again, I'm only talking about it because it's the last day of the sale. Then the other days, hey, go do your own thing. But I did grab myself a 75K evaluation account, and it only costs $34 because it's 80% off. So just type in coupon code SAVE80 after you click start now. Should be the first link in the description. Help support the channel, help support the stream. Let me know if you need any help when you're doing that. So that was the SPY today. Definitely really on point with the pre-market analysis. However, I was a little bit surprised on Lululemon. So Lululemon, I said yoga pants to drop. And technically they did drop in the AM, down 1.5% really quick. That shows that and reminds us that selling can be really fast, but buying takes a long time. So an all-day rally, but some really fast and sharp sell-offs. So Lululemon, I do think it is still more likely to be underneath that 280 level. But as you can see, positions can turn around very quickly. However, with credit spreads, the probabilities are in your favor. Boy, how do you like this green Weenie Trades shirt? I've got a white shirt now. Cool. So anyways, not always right, but hey, I still have a lot of time for Lululemon to be underneath 280. And guess what? If it blasts off and everybody shops and buys some yoga pants, hey, that's not the worst thing in the world, but I would have to take a loss on this position. And the maximum loss is 1,000 minus the credit that I received. So it'd be $540. So that is Lululemon. Similarly with Tesla, Tesla had a nice good reversal day today, almost about to break down. We got a low, we got a high, we got a higher low, we got a lower high, we got a higher low. We've got one big tightening range on Tesla. So I do expect this tightening range to be contained on Tesla, and probably it could rally a little bit further, maybe up to the lower 720s, maybe 730s. If it gets as high as 750, that means that on a back test, it still could launch pad and break out to the upside. So as long as Tesla's underneath, call it 730, it's either bulls or bears' ball. However, the bears take over the ball, certainly underneath today's low. I'll be shorting Tesla underneath 650 after the pivot that it made today on a multi-week basis. Otherwise, looks like it's going to chop and flop all around. Similarly, NEO this morning, I said NEO, I like a NEO short underneath 21 and a target of 20 and a stop loss of 21.50. Here's one of those points where it helps to adjust your target. See, whenever I get a big spike in my favor, that's when I actually like to take profits. So I actually was able to take profits on NEO at the low of the day. I either take profits at my profit target or I take profits on a condition. That condition when I'm trading options, in this example, a put option, is if there's a big flush in my favor, that's an implied volatility spike. And I love taking profits on implied volatility spikes. So those are the trading recap. Some good, some bad. But let's get into some member ticker breakdowns. First up we've got over here is BRK/B on a higher time frame. So let's check out the daily time frame first, and then I'll actually check out the weekly and monthly. So daily time frame, high, low, lower high, lower low. Berkshire has had relative strength in the past, and actually I am going to start with the monthly now. So on the monthly time frame, let's check out the money flow index. So money flow index, lower highs and lower lows, so that's confirming the trend. Monthly high, and it might have just found a low, so this is just a high, and now just a deep sell-off. Broke this entire consolidation period from the bottom side. Now let's see if it grabbed all those stop orders, grabbed all that liquidity. Maybe if it wants to grab all that liquidity up there at 294. So we could have 1 to 2 months of upside on Berkshire if that is the monthly higher low. So that's really interesting to see on the monthly time frame. If we go to something like the weekly time frame, this is not constructive. This is bearish. And the reason I say it's bearish is we first have a big drop. Now we have a bear flag right over here. Drop, bear flag, big drop, minus 18%. Now we are forming another bear flag. So it's still a bear flag, even if we rally all the way up to that 296 on Berkshire. And where'd that 296 come from? It's the pivot from the last breakdown of the prior bear flag. So this is a big bear flag, big breakdown. Nice volume day on that move right there. See the breakout in volume? Just interesting. And notice how on the up moves, the volume is decreasing. That's very characteristic of a bearish flag. So that means we could even rally for a week, even 2 weeks. But we'd likely even come down. Maybe we chop and flop all around. But this pattern usually results in the downside. So how far can Berkshire go? Well, I usually like to do retracements. This is still the weekly time frame. Let's grab the low down here at 59.50 up to the high 362. We broke underneath the golden fib. The golden fib, if it holds above it, generally gives chances for trend continuation. But since we're underneath it, there might be a little bit more choppiness and consolidation. So let's draw that again from low to high. Next area of support looks like it already found some support at the 50% retracement from this low to this high. And that was about the 261 area. So what happens if we start to break this bear flag to the downside? Your first target, where it could bounce, is 236. But I think what's more likely for Berkshire over this bear market is maybe a spike of $200 a share. So Berkshire price target of $200 a share is what I see as the most likely scenario at this point in time. Of course, if we break above this bear flag and hold it, maybe we can get above some of these resistances and like form a different chart pattern or get some sort of bull flag going. Hey, that could be a little bit different of a scenario for Berkshire. So More bearish than I am bullish. However, short term could chop and maybe go sideways to slightly higher. So that's my analysis on BRK/B. Next up we got is CVX. Hit the like button if you're this far in. I appreciate you tuning on in. Be sure to join as a member, subscribe, hit the bell, join the Weenie Academy, get some extra breakdowns over here as well. And let's check out CVX over here. So CVX having a down day. And briefly, I'm going to look at oil. Oil looking like it broke this long time trend line with the rising wedge. So I'm going to switch to the daily real quick. So oil over here, very interesting technicals. So we got a low, we got higher low, higher low, higher low. Very strong trend line right here. Very strong trend line. Above the trend line, we did a nice good rising wedge that did break down. Not on the best increase in volume, but nonetheless an increase in volume. We break the support line. Gosh, there's a lot of muck over here. So there we go. We got higher low, higher low, higher low, higher low over here. Just going to draw that. What happens? We break down and back test it. This is some of the best entries for shorts. The pullback. The pullback to resistance is some of the best areas to enter short because you have a tight stop loss and usually get a nice good flush in your favor right away. It's one of the last waves in like an Elliott wave sequence, for example. But either way, oil, this chart pattern, again, more likely to chop and flop on lower. And I am expecting oil probably by about October to be back down to $80 per barrel. So 80. And so how does that convert to CVX? CVX, similar thing. It's going to mirror the price of oil pretty well. I would expect CVX to probably come back down to this 118 to 120 level, come back to its normal trend. And there's a big base over here. Whenever there's this big of a breakout, that former breakout area tends to get tested more often than not. So this is a long consolidation period. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 times. 11 times that we were hitting that as resistance and we finally broke out and ran up 50%. That can sometimes be a magnet to retest and maybe it gets a bounce off that level. But same thing with OXY 112. If we look at the weekly time frame, looks pretty clear to me as well. 112 is the most likely scenario. It looks like this is a descending triangle on the weekly. Drop, base, drop. And if we extend the flagpole, actually technically we can extend the flagpole, but it's not necessarily a bear flag. Actually what you can do is you can do the height of the highest point within the triangle, then duplicate that to the breakout point. And that does still just measure to our former breakout area, 116. But a stretch target of 103 on CVX. So more bearish than I am bullish. Sure, you could go ahead and buy and maybe get a short-term pop, but I wouldn't expect it to break this lower high trend. So I would expect CVX to stay underneath $150 a share for quite a while. So for example, if let's say you have 100 shares, if you have 100 shares of CVX and you see a nice good green day of like 3 to 4%, you can go ahead and very likely sell 150 calls and collect rent on those shares and not get assigned. And guess what? If you do get assigned, it's still likely going to sell off anyways. So who cares if you get rid of your shares at 150? That's just my take though. None of this is financial advice. Who knows? OXY could moon. It's just the less likely scenario. Sorry, I'm saying OXY. I think Warren Buffett bought Oxy today, and that's why I'm talking about it a lot. But really, it's CVX. So take everything I said. If I ever said OXY, just convert that to CVX. Very interesting stuff. And lastly, let's break down GTLB. GTLB, very steady uptrend. Very nice. So higher lows. Priorly had kind of a channel downward. Nice good channel downward. Lower highs, lower lows, lower highs, lower lows. Base. Sells off awkwardly. Higher low compared to 30.74. And now stair-stepping higher. Nice good U formation. Nice good U shape. And got above the breakdown candle. So this is a breakdown candle right here. Whenever you break above and close above a breakdown candle, that is bullish behavior. We do have a slight increase in volume as well. We've got bullish confirmation on the money flow index. And that just means money flow index is making higher highs. You can draw a nice good uptrend line. And so is the stock. The stock is also making higher highs. That means, hey, there's no suspiciousness of this rally. So checks, check, check. So that is more bullish than it is bearish. I'm going to set an alert to see how it reacts at 58. If it can hold that as support and then start to curl higher, that can be a buyable long entry with a stop just underneath the prior breakout area as a tight stop. Otherwise, the more proper stop loss, if you're actually swing trading this, is underneath this pivot. So what does this look like? That's the entry. This could be the correct stop loss. That's your risk unit. Let's call it $10 a share. That's pretty wide of a stop. So the question becomes, do you think you can get at least $10 a share to the upside? And my answer is probably not. So even though that it could go higher and probably will go higher, the risk to reward on this trade doesn't seem that good to me. So that's how I'm quickly evaluating a trade. Again, there's thousands, millions of trades that I could take. The question becomes, what's the best ones? And a big factor for me is risk to reward. Now, it does make sense if I can have the tight stop loss. So let's say I risk 5% and I'm risking $4 a share. Okay, now we're talking. If my risk is $4 per share, and that's my R unit, hey, if we start to break out and really go above 59 and test something like a profit target would be 70, hey, that could be potentially worthwhile. You know, risking $4 to make $10, a little bit over 2R, 2.5R, call it. So that could be interesting. If you use the tight stop, the trade may be worth it. The momentum needs to be there, and it just needs to hold this former breakout area of about 58. So that's my analysis on GTLB. And that's all I have for today. Go check out Kiani Productions. Go check out this stream that we did. Very great for beginners and just something to listen to for everybody. This was part 1. You're going to want to see part 1 before you see part 2, which is going to be this Thursday. So be sure to hit the subscribe button, hit the notification bell so you know when they're going live, and I'll be updating you at Weenie Trades Live. Also, Profit for Life is in the making. Get hyped. I'm going to be sharing with you my best setups and best things that I've learned over the years. Lots of fun stuff. Thanks for tuning in, you guys. See you tomorrow. Peace.